Today I'm going to share with you guys the hilarious story of how I stumbled into my very first venture capital deal. Time to think like an investor. Hello and welcome back to the channel. If you're new here, my name is Josh. I'm a certified financial planner and I run my own wealth management business. Now, if you've been following this channel for a while or even just the last few videos, you'll know that I just had a major transaction in my life. I just sold my very first rental property, which means there was a lot of proceeds I had to figure out what to do with. And in my previous video, I kind of gave a rundown of exactly where I think I'm going to end up delegating this new cash as an investor. Again, the hope of this channel is that you guys can kind of watch what I'm going through as someone with a background in finance, and I can kind of tell you guys what I'm thinking and what's going through my mind, and maybe you can glean some insights from that. But one of the things I talked about in that last video was the fact that I'm very fortunate and very lucky. I have been working towards financial independence for a really long time. I've built my own business. I've been investing for a decade or more. And so I'm in a position now where I have enough sitting there invested in income producing assets that I will be able to retire early, and the habits that I've ingrained in my life financially are going to allow me to do that. And so any additional money I come into or any additional growth in the business can kind of be used towards riskier things or things that are more exciting or more volatile, because I know I have the bases covered, which leads me to a really funny story. So a few months ago, I am sitting in Toronto Airport hunched over a toilet in a stall because I am so unbelievably sick to my stomach, sicker than I've been in a long time, and I have to get on a plane in like a few minutes. And so the funny thing is I'm on a bachelor party, and the reason I'm so sick is because we were out very late the night before in Toronto in a connection before we leave to Miami. Now, all of my friends who are on this trip with me have already gone through check-in, they've already gone through security, but I need a little more time because the last thing I want to do is puke in the middle of an airport. It would be absolutely humiliating. So now I'm probably in this stall for 20 to 30 minutes before I muster up the courage to get out. And so I walk out in the airport, and what's happened in the 20 minutes that I've been in there is a massive line has formed, and now there is almost no way I'm gonna make this flight on time. We had kind of timed it so it would be perfect, but now it's gonna be a 30-minute wait to check in, an hour wait to security, and my friends are texting me saying, "Where are you? We're at the gate." And so now it's a hot day outside, I'm sweaty, I'm sick, I have a headache, I'm gonna be late for this flight, I'm gonna miss my trip, and I'm standing in line waiting, and I get a tap on the shoulder, and he says, "Are you Josh? Are you Josh Olfert? Hey, like, I know you from YouTube." And I'm like, oh my God, this has to be the worst possible time for me to meet someone new, because I am absolutely decrepit, I look disheveled, I am just angry and frustrated. And it's actually a connection that I had made through this YouTube channel, and we had been discussing a new business that he was starting online in the wealth management space. Now, this company is in the very initial stages, but they have a fascinating idea for new financial advisors. What they're trying to do, if I could put it in my words, hopefully I'm not screwing it up too much, it feels like they are building the Shopify for financial advisors. And if you're unfamiliar with Shopify, it's this beautifully integrated digital platform where you can sign up and you have access to this massive suite of tools where you can create automations, you can add plugins, you can essentially customize your own digital financial advisor wealth management shop. And so that is incredible because so much of the technology we have in this industry is so old, it's on legacy systems, it's really crummy and crappy to try to work out and give clients a modern and intuitive experience. But that's exactly the problem this guy is trying to tackle. And so here I am in the airport, humiliated, trying not to puke on this guy, essentially. But we agree, hey, let's set something up. Let's get on a Zoom for like a demo where he can walk me through this product he's been working on. And so a few weeks later, we get on a call and this guy starts walking me through the product. And I am so unbelievably impressed. And I can't really share too much about the company. I'm not really sure what I'm allowed to share. But all of that being said, I am walking through this hour-long call and I'm thinking, wait a second, this company here fits so many of my different investment criteria, or even the major mental models in investing. You could think of, the Warren Buffett model, right? There's four main things that Warren Buffett looks for. One, is this in my zone of competence? Do I understand this business? And the answer is, well, for me, yes. If I were to look at investing in this company, absolutely. It's actually in my industry. I know this business better than any other business. Second of all, does it have a sustainable competitive advantage where you can invest in it for a very long time? Yeah, absolutely, because all of the establishment wealth management firms are working off legacy software, and it would be almost impossible for them to go back and rewire everything. They'd have to start from scratch. Third is, do you trust the management? And absolutely, I've met the founder in person. We've had talks at length, and I really do believe this is the right person for the job. And fourth, can you buy it as a reasonable price? And the answer is, well, we don't know yet, but what we do know is that at the venture capital stage, if you're willing to take a boom or bust risk on something, that is probably the best pricing you're ever going to get on an investment, is at the earliest stage. And then you could think about maybe the Peter Lynch method, which is, would you use the product of that business? And if you can get that at a reasonable price, buy it. And so for me, the idea is, the second this product were to go live, when I saw that demo, I am going to be their first customer. I am going to use the product 100%. So it kind of passes the Peter Lynch test. And then if you think about the Jeff Bezos test, right? Are you investing in something that's going to change the world? And when I saw the demo of this product, I thought, okay, if every advisor gets their hands on this, it will absolutely change the industry, and it's going to make the end client experience so much better. It's going to deliver what we wish we had with a financial advisor or in the wealth management space. So it's passing all these different tests, and I just say to him on this call, I'm like, hey, if you ever open up like a seed round or you need funding, I'm not gonna be a massive investor, I'm not gonna tip the scales here, but I would absolutely love to get in at the ground floor and support this company. And he says, you know what, yeah, that's something we've been thinking about. Maybe that's something we could do. And this is the serendipitous part. Just as I'm selling this house and I have this new influx of capital that I'm willing to take risk with, I get an email from him and it says, okay, we're opening up our very first seed round to angel investors or people who want to get in at the ground floor. And I think, this is hilarious. This is all kind of falling into place at the perfect time. And so that's my hilarious story about how me being sick in the Toronto airport led to maybe potentially this really serendipitous first venture capital deal, which I've been wanting to do for a very long time. So I wanted to tell you guys a little bit about what I'm learning through the due diligence process and the different resources and things I'm coming across that maybe you could learn from, because maybe one day you want to get involved, or maybe you are involved in venture financing or angel financing. And so the first thing that comes to mind is there is so many resources and tools available out there through places like AngelList or Y Combinator for companies who want to get funding. Essentially what he said to me is, hey, by the way, we're using the safe funding paradigm through Y Combinator, and he sends over a bunch of resources with links, and it has this entire pre-templated process for how to get venture funding that's done by Y Combinator. And by the way, I said the word safe there, and this is something that I'm learning too. I'm familiar with venture, but I'm not unbelievably well versed in it. And so this is the structure of the deal. It is a simple agreement for future equity. It's not as if in this very first round, we get shares right away and there's a price per share and we invest in the amount of shares we'd like to have. It's essentially a convertible instrument, kind of like a convertible note or a convertible bond. The way it works is you exchange startup capital, you give the company money, and what you get in return is an agreement or a promise to get your hands on equity in the first priced round of financing. And so if they get a Series A in the future, or there's a big funding round from multiple different venture capitalists, at that point, my safe agreement that I purchase will allow me to get my hands on that pricing at that future time. And so that's kind of the way this deal works. It was interesting to me to realize, oh, I'm not buying shares right away. I'm essentially buying a contract that allows me to convert this into shares down the line when there is a priced financing round. And as I read through this, it makes total sense. These safe agreements have become much more popular over time for both investors and venture capitalists, because when you have a new startup business that doesn't necessarily have a ton of data on their sales and their revenue, it's more of that idea phase or that development phase, it's really tough for a company to give away voting power by giving away shares. It's tough for them to lock themselves into contracts or to pay interest to investors like a convertible note would. And as the investor, it's very simple. It's so unbelievably easy to do a safe agreement because you don't have to worry about negotiating and using lawyers and accountants to get the valuations right. You're simply saying, hey, I'm getting myself access to the first price round, at which point there's gonna be a lot more due diligence. But ultimately, this is a really exciting thing for me because I could put up some amount of money that could either go to absolutely zero and I will never see it again, or it could 10x, 100x, who knows? And it's the exciting thing of supporting a company that you believe in at the ground, at the grassroots level, and being able to watch that progress and feeling like you're a part of the development of something, especially something that you really enjoy and something that you really admire. Another thing to note is there is like zero liquidity. This is money that I'm going to be locking up, and it's money that I either never see again or I see in droves later on and many multiples of way down the line. It's not like money that I can access in emergency. This is locked up. It's stuffed away. So this is a fun new type of investment that I'm involved in. There's going to be a lot of due diligence involved. The things that are coming through my mind are I'm going to need independent legal advice. So in the event that it does go through, I'm going to have to bring this to my corporate lawyer. They're going to review it. We're going to go back and forth and figure out if this makes sense at the time from a legal perspective. And then there's the whole taxation and accounting picture. I'm going to have to sit down with the accountant and think about, okay, should this investment go in a holding company that owns the shares of my operating company, Haven? Would that be the best for tax purposes if in the future we do sell or we do have some sort of exit? Is it something I want to own personally because my personal taxes are relatively low? These are all the different things we're going to have to go through. And that being said, though, those things are relatively simple. They just require a pen and paper and really hashing things out to see what makes the most sense for me. The one thing that is going to be the trickiest hurdle, which I could technically justify but isn't exactly a clear-cut black and white, it's more of a gray, is in order to invest in startups at this level through an agreement like this, you have to be an accredited investor. And so there are many different ways you could qualify as an accredited investor. You either need to prove that you make $200,000 a year, you need to have $1 million in invested assets, you could have a specific registration with a securities commission, you could be a financial industry insider. There's all sorts of ways you could be deemed an accredited investor, but that's probably the biggest hoop I'm gonna have to jump through to justify that I might be eligible for that title. And at that point, if we can get all those boxes checked, it'll be exciting to bring you guys along and teach you what I'm learning from my very first venture investment. So anyways, guys, thank you so much for watching this video. Hopefully you learned something, or maybe it got you excited about investing in early stage companies one day if you're not already. But for me, it's awesome and I'm very excited. So hopefully it all works out. Thank you so much for taking the time to watch this video. Thank you so much for supporting this channel. And as always, if you did enjoy this video or you want to see more like this, make sure to hit that like button below. Leave a comment to tell me what kind of content you would like to see. And other than that, hit that subscribe button and turn on post notifications for more videos just like this one every single week. Until next time.